Next ticker that I'm going to go over is coin, another popular one. Uh, so it's interesting because originally I thought this was the end of the correction. So if you look back here from April to May, we had an ABC all the way down here to 205. So that looked like a bottom, you know. If you're looking at the chart, and we started an impulse move with what I thought. So we had one, two, looked like a third wave, and it went, let's see, it went past the 1.61 retracement. That's a normal third wave move. So let me zoom out here real quick. But here's where you can figure out if you're using this technique and you think this is a third wave move, how do you know when it's going to start, when it's going to break down all the way here? How do you know when to get out? Because obviously this was not a fourth wave. How do you know when to get out? So I drew a line right here. If you're in a stock and you get an impulsive move right there, you can either, sell at the top around the 1.61, which would have been a great sell here, or if you want to stay in longer for the fifth wave move, you think a fifth wave is coming, then you need to have a stop loss, because something like this can happen and will happen, because everything is probabilities, nothing is exact science. So where do you put your stop loss at? I drew a line right here. Usually a fourth wave move will not break below the 0.5 fib retracement. So if you were in this stock and you did not sell at the top, you could have had your stop loss at 297 based on the weekly chart, and you would have gotten stopped out and saved yourself $130 per share. So that's a simple way of doing it, because you don't know. That could be still a fourth wave. It goes all the way to 0.5, and it could bounce and go higher than 369. But as soon as it breaks that, you got to use probabilities and say, okay, I'll take my profit. I'm done. This looks like it's going to go lower. Sure enough, breaks through, goes to all-time low. So in that case, I changed it from being the end of the correction, 1, 2, 3, to A, B, C, B. And then if you look at where it's at now, I would say that we're at a 1, 2, 3, 4. If I zoom in here on the daily, A, B, C, 4. And going by this, I already have it all calculated. Going by this, it looks like we ended the fourth wave at 219. And it's interesting too, I just did the fourth wave calculations on that, what I thought was an impulsive third wave. But now if you look at this, you can do the same thing here. This fourth wave pullback did not encroach across the 0.5. So you know it is a fourth wave. And then it went to 217, it couldn't break 223, and then it came down here, and we're at 193 right now. So it looks like that is a fourth wave. It's a valid fourth wave. And so knowing that, if you were in right here and you caught this, great, but don't normally recommend buying after a third wave down move to catch whatever you can get. You would have gotten a pretty decent sized bounce, but the probabilities aren't in your favor. You should just play with the trend. But anyway, let's go back and see where exactly I think this is going now, based on knowing that is a fourth wave. So you take the fib tracement tool, third wave, and I already have it drawn out here. The 50% retracement for the fifth wave has us going to 113 bucks to 88 bucks. And I know that sounds outrageous, but I mean, I'm only doing the technical analysis on this. I'm not like looking at market cap or anything else, like, oh, the company is going to be doing this and this. This is strictly Elliott wave. So it's saying 113 bucks based off the chart right now. If you think I'm wrong, you can always decide to, if you thought this was the bottom, if you zoom in, you could probably, I mean, this is clearly an ABC pattern, but if you wanted to buy in on this pullback because you thought this is the bottom, or you're a long-term investor, I would recommend buying about where we're at, 193. I would say all the way down to 184. Me personally, I wouldn't do it because I clearly see a fourth wave move, but if you think that's the bottom and the market's going to start melting up here soon, you could buy here and then just put your stop below the low. That's one way of doing it. It's not really valid in my opinion. I want an actual clear impulsive move. So I want this to be a big move and then I want to pull back. I don't want this ABC pattern and then a pullback because probabilities are this is going lower than this all-time low right here. So do your own due diligence, whatever you think and whatever your goals are. I'm only swing trading stocks with this criteria, so it works for me. But if you're a long-term investor, I think that this is a pretty good entry. So summarize, we're going to go to 113 based off Elliott wave. We can look back on this video and see how accurate it was. And like I said, you can buy in here. You can buy in from 190 to 160, stop below the low if you think I am wrong. So I will do any ticker requests you guys want. I really enjoy doing this, so leave them in the comments if you want something done. And like and subscribe. I'm putting out videos pretty much every day. This works really well, and so I'm trying to help out other people to get good entries. It's not going to be perfect. Elliott wave is not perfect, but in general, it's going to give you a pretty good idea where you should buy and where you should sell, and that is how you make money in the stock market. So I will catch you in the next video.